Luke Chandler is a world authority on food prices. He's the global head of agricultural market research at Rabobank, and he's with us from London this morning. Luke, we know that rising food prices were one of the triggers that created the crisis in North Africa and threatens crises elsewhere. But to what degree are these crises going to become a vicious circle, driving food prices up even further?
Well, I guess there's a little bit of a difference in terms of short-term and long-term implications. Obviously, at the moment, there's a lot of concern around shortages of not just rice, but also wheat. North Africa is a significant importer of wheat globally, as well as the Middle East. So I think we're almost seeing lessons learnt from 2007-8 and the food shortages and price rallies there. Governments are being more proactive this time rather than reactive. They're looking to build domestic stockpiles. And as a result, we're seeing a little bit of this sort of tension in the market and a little bit of panic buying in the market as well. And as a result, we've seen this spike in prices in the last couple of weeks.
So, Luke, how does that hoarding play out in locally and in financial markets? You see short-term spikes, as you're pointing out, when governments rush into certain agricultural commodities markets and buy things up. Does that help to moderate prices locally? And at what point does the effect peter out in financial markets?
Yeah, I mean, that's obviously the intention of local governments, to ensure there's sufficient stocks domestically so that they can feed their people. Obviously, internationally, when we see more and more governments coming in to build stockpiles or to prevent exports, such as we saw last year following the drought in Russia, the Russian government stepped in to ban exports, and as a result, we saw prices spiking. Now, obviously, the more government intervention that we get, the more uncertainty there is in global markets, and as a result, we get more volatility, and we see these rallies like we're seeing at the moment. On the back of that, though, there's also the longer-term fundamentals, and if we look at this season, we're looking at the tightest US soybean stocks in almost 40 years, perhaps even the tightest US corn stocks on record. We may take out the low set in 95, 96. We've got very tight fundamentals in the cotton market, as well as wheat. So all of these markets at the one time are getting very, very tight in terms of their inventory levels, and that puts a lot of pressure on next year's supplies and heightens the risk, if you like, of a further bull rally across the agricultural commodity complex.
Okay, so Luke, what people want to know is where prices are going to rise the fastest. We talked about rice, wheat, you just mentioned corn and cotton. What do you think?
Sure. I mean, at the moment, the market we're most sensitive to further price rises in is soybeans. If you look at the current situation in Argentina, the La Nina weather pattern that's in place at the moment generally brings drier conditions there. If we think back to 2009, the crop was decimated because of the La Nina. We saw a spike in prices. Given the very tight fundamentals we have globally in the soybean market at the moment, a further setback in Argentina would be extremely bullish for prices. We're also looking at stronger prices for corn moving into the spring plantings in the US, when we've got cotton, soybeans, corn, and even spring wheat all fighting for very limited acreage. So there's a lot of pressure on these fundamentals, and I think we're more likely to see higher prices than lower in the couple of months ahead.
Luke, great perspective. Soybeans, one thing we haven't really been talking a whole lot about. That's Luke Chandler. He's the global head of agricultural market research at Rabobank.